This is Smart Investing with Mike Wren.
Securities and advisory service offered through KMS Financial Services.
This is Smart Investing with Michael J. Wren. With Michael's producer, Chris Martin. You can email us your questions. Go to smartinvestingshow.com to see how.
For I have the pride, the privilege, nay, the pleasure of introducing to you the one, the only.
This is Smart Investing with Mike Wren.
Hello there, everybody. Thank you once again for bringing up this podcast of the Smart Investing Show, where we try to take the topic of investing. Number one, we try to make it easier to understand. Number two, we try to get you good, relevant information on each and every show. And thirdly, we try to be entertaining. And with the entertaining part, that's usually Mr. Chris Martin, the producer extraordinaire. We call him Spider-Man today. So, how are you?
I'm doing okay.
Good.
I'm getting ready to go to a tiny Comic-Con tomorrow.
Where's it at?
Sandpoint. It's
Okay.
called Sandemonium. It's done in like a either school or library. I couldn't tell.
Well, Sandpoint, I get the feeling, is kind of a vacation place. You know, it's a destination place for people to go goof on the water or ski in the wintertime. Wouldn't you agree?
Sure.
Okay.
I don't do either of those things. So
Well, that's my point.
I did notice that the last time we went last year, there were no less than 30 yard sale signs in one guy's little corner. It's like that seems to be like the yard sale capital of the world, I think.
Well, what I was thinking of is the nerds of Sandpoint need something to do. Is because it's kind of a jock-oriented area where you've got people in swimsuits, which the Comic-Con people aren't going to do that.
Yeah, it's never swimsuit season for nerds.
and then it's it could be ski season, and I don't recall a lot of stormtroopers skiing.
Like to stay inside when it's cold, play some video games.
So you might be busier that you will see the slice of the Sandpoint population that nobody else sees.
Well, if my memory serves me right, all 15 nerds need something to do. So that's the way it was last year.
The people that handle the computer systems for the local restaurants and shopping
just need to break up the day. That's it.
And the retail establishments, the people that run the computer systems for those folks, at least they'll have a day.
They got something to do.
Right.
Now I'm doing a just a little trivia game. There's a thing called Sevens, where it's like pyramid. There's 7 answers. You have 7 seconds to answer each question. And I'm going to try superheroes on my wife, Janny, who never goes to a Comic-Con. And then if you can beat her score, I give you a stupid prize that I picked out of a dollar store. So
awesome.
the theme is play a stupid game, win a stupid prize.
Wow, the nerds are just going to be clamoring all over you.
It's free stuff, and you get to talk to a celebrity. You're welcome. Okay.
Speaking of a game show where you answer questions, I don't know why I clicked on it, but I clicked on some YouTube thing that popped up that said epic fails on Jeopardy.
Oh, okay.
One of the funniest things, so those of you listening to this podcast, if you want to experience something really funny, I guess somehow search on YouTube for Jeopardy funnies, and it is a category on NFL football. And
I'm not gonna laugh because I know what my score would have been.
no, I think you would get one or two of these. They were pretty simple questions, and it's nothing but crickets in the background when they ask the question. Somebody dubbed in the sound of crickets, and the 3 contestants were expressionless, and and finally at the end, who's the host of Jeopardy again? It's
Alex Trebek. Who is Alex Trebek?
Yeah. He said for the last one, he says, "Why don't we take a look at the last question here for 1,000 just for fun?" After the second
That's gotta suck.
After the second answer, he says, "Should we go to commercial?" There's no commercials on podcasts. And that's what the person listening to us right now, right now is probably thinking.
Oh, at least 30.
Yeah, at least 30.
That's gotta suck.
So I have a pretty new note-taking device called a boogie board for the radio show. You like that? Yeah, you do. Great. Thanks.
It's called a what?
Boogie board. I got it at...
because I think that name's taken.
I got it at the my favorite store in the world, which is Barnes & Noble.
Okay.
Yeah. So on today's show, what are we going to be talking about in this world of investing, this world that we live in? We're going to be talking about you, the investor, me, the investor, a couple different things. Where are you most comfortable looking ahead? Let's not look in the past. We know the market has gone up since the market last went down. It happens to be a decade that has passed, but the market was down so much that it being up for a decade doesn't surprise me at all, especially because when we started to recover after the decade that went down, not the decade, but after the last down market, that recovery initially was pretty pitiful, pretty mediocre. We really only started experiencing some animal spirits after the election. So, where are you as an investor most comfortable looking ahead? And I tend to ask myself a couple questions. Looking ahead, what's going to stay the same? How are people going to spend their money the same? How are they going to behave the same? And then I ask another question, what changes? How do I think that people are going to change their behavior, change how they spend their money or what they spend their money on, and blah, 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 blah. So how do I think, what's going to go on there?
I think it just all depends on how the stock market crashed or went down. If something happened to Japan, are people going to stop buying Japanese products, or are they going to buy more?
You mean other than bombing them with an atomic weapon or two?
I didn't want to bring it up. I think it's too soon.
Or Godzilla?
Godzilla.
I think that's in fashion.
So
now.
let's say Godzilla attacks Japan. So, and that brings the stock market down a little bit.
Yeah.
Are they going to buy more? Are they going to invest in Japan? Or are they going to shy away and maybe look towards China?
I don't know what to say except that I apologize to the listeners for having to listen to this. The 7 podcast listeners, we're down to 4 after that, for sure.
I'll bring them back.
Okay. So that's what I think about, is what stays the same and what changes. Another, maybe we'll actually lead with this on the show. Basically, adding a dose of reality to what you're listening to. Let's face facts. What I do for a living is extremely hard. What people ask me to do for a living is extremely hard. My industry is not the easiest industry in the world because people are wanting reassurance and safety and growth out of the future, and nobody can tell the future. I'm 52 years old. I've never been 52 years old before, so I have an idea of what maybe I should do or not do.
But you've seen other people turn 52, and you can work on their experience.
But they're entirely different from us, and there's a little bit of psychology in here. Is that there's some people out there that are pretty real with themselves in what they know and don't know, and then there's some pretty self-confident individuals. Sometimes they're self-confident with their fashions, what they wear to Walmart or to the beach, or we've got the fair coming up. So if you want a little bit of an example of what I'm talking about, go to the fair and watch what people wear at the fair, because it's going to be different. And, that might be a level of confidence that might be unfounded. And it's the same thing in my industry. When you get past a point of all these predictions in every single magazine that I've ever read, the journalists will have their yearly predictions magazine. Well, how many people can tell the future? That would be 0. So they're having articles in these pretty well-known magazines based on complete conjecture. And I think it helps that if you're listening to this podcast, you're a very realistic person. Let's just have a realistic discussion that we can't tell the future. And when somebody asks me to tell the future, and if I give an answer, everybody knows that I'm lying because I can't. And I think that we, as a people, tend to lose sight of the fact that even when you've got some big talking heads in my industry and they start opening their mouths and so on, that they're lying. They can't tell the future. That's why Warren Buffett, when somebody asks him about the future, he gives some of the best answers because if you think about it, he gives answers based on him personally. He'll say, I feel that the United States is going to be in a better position 10 years, 15 years, 20 years from now than it is today. That's usually his answer. And I think that that's a very realistic answer. It's not only happens to be optimistic, but it's actual reality as well. For most of the people, when we're talking living standards and when we're talking investing, after a 10-year period, you typically are at a higher point than when you started the decade. And that's what he's talking about. What I'm trying to get to here is that if we are very, very realistic with ourselves into what we do not know, then I think that we are going to be able to reassure ourselves going forward with the decisions that we make coming from a very realistic point of view that we don't know the future. And I circle back to these first two questions, or three questions. Where are you most comfortable looking ahead? So that means if there's anything, any sort of investments that we have going forward, not looking in the rearview mirror, but looking out the windshield. If we have investments that you're uncomfortable with, we should talk about that. I don't necessarily mean investments that have made you a lot of money or not a lot of money. When you look going forward, what makes you feel a little bit more comfortable? What makes you feel a little bit less comfortable? That's a big deal, because if you're talking that, let's say you're a person that is a little bit distrusting of technologies because you don't understand them all that much. And you're wondering, yeah, Microsoft's big, Apple's big, but you have it in the back of your head that when's the next thing that's going to come along that kind of kicks them in the shins? Where you might be the type of person where you understand how, let's say, food and beverage companies make their money, or pharmaceuticals. Well, let's just say the food and beverage companies, for example, and this I don't believe is true right now, but let's just say, for example, you have to pay more for those companies and the earnings that they supposedly give you, that they're supposedly going to give you in the future, than you would for some of the high-tech companies. In other words, they're more expensive. It might not matter if they're more expensive, because when we're looking into the future and we don't know what it holds, we've got to be comfortable. So if you're more willing to pay a little bit more for something that makes you comfortable, that right there is probably the better investment going forward, because you're probably less likely to panic out of it when bad weather comes, when bad markets come. You following along?
Yeah, I'm just trying to think. It's kind of like, I don't know. I don't understand how Apple works. So in a way, you're trying to think about the future. The investor is trying to think about the future. Like, I think Apple's going to have something come up. Some competition's going to come up and put them out of business. So that's what I think. So I'm going to invest in food instead. So you're kind of trying to gauge the future, but you're asking another person to gauge the future, and both of you don't know dick.
You're right. So that's why we're talking in terms of just comfort, where I'm talking distrusting levels versus trusting levels. Where is somebody's wheelhouse? Where is their comfort level? A lot of times
it's just all in their lifestyle.
Exactly. But that we can make money. There's companies out there that make all kinds of money in all kinds of different ways. There's companies that make money selling cigarettes and tobacco. There's companies that make money selling aspirins and Tylenols. There's companies that make money selling tires and gasoline and cars, cell phones, cell phone service. So trying to funnel that down can be extremely helpful.
This may be an unfair question to you, but have you ever had somebody say, I want to invest in this, and you went, because I know a lot of people that they own, they own a comic book store.
Yeah.
And they still think comic books are going to be like, the future. And they're not. There's almost no sales in comics right now. But like if somebody came in and goes, yeah, I want to invest in DC Comics. Do you go, it's like saying I want to invest in an 8-track.
No, I just tell them, you're paying, if I'm going to help you run the money, I'm going to say no. Because you're going to hold my feet to the fire. If you're hiring me, you want to be able to hold me accountable for the performance. And if you're going to hold me accountable for the performance, then I have to have some say. performance because I'm completely okay with being judged on performance. It's just that you can't then tell me what to do. It's kind of like the Vietnam War. You can't make me a general and tell me to go win the war, but then all of a sudden, no, you can't bomb there. We want you to bomb here. And you're wondering, what the F are you talking about? Well, there you go.
We want half of your guys to carry Nerf guns.
Exactly.
Because I'm not comfortable with violence.
Exactly. Yeah, it's that sort of a hierarchy where, of course, I don't know everything, but I am the one that's taking on the vast majority of the responsibility because the client is paying me to take on that responsibility. And that's also a little bit what's different is I'm okay with that responsibility. I would say most of my competitors aren't. They are trying to make it into a sales process to where you don't trust them, you trust the process or the product or the technology. The more that we talk and look at these phones, I think the less, the smartphones in the world, I think the less trusting a human being might be because you're having a relationship with your friends sometimes like one step removed or two steps removed instead of being one-on-one. And if we're going to be real about not being able to tell what the future holds, we should be more real in talking one-on-one. In fact, that's one of my, if I'm going to judge myself harshly, I really find myself anytime I'm meeting with a client in person in my office, I wish I would be meeting with them more because it's fun. So from now on this year and as things go forward, I'm going to try to get more client meetings in my office and, sometimes me driving to their house, but it's much more efficient for me at what I do in a day is if I'm not, driving all over, if I have them come to a central location.
So you're just talking basically the difference between talking to somebody in texts.
Yeah, and I think it's extremely important now because, for lack of a better word, it's a new era. It's always a new era. We don't know what's coming along, but when I'm looking at these questions, what stays the same? A hell of a lot of behaviors for clients are going to stay the same. The consumers in the United States, people are still going to drive their cars. They're still going to talk on their cell phones. How they view their media has already changed. So if anything's not going to stay the same, I think it's already changing drastically. Even me, I'm one of the slowest people to adopt change when it comes to media because I still pay a big monthly bill for cable. There's a lot of people that don't do that anymore because I'm old school. I grew up with Monday Night Football. Me having those sorts of sports things available to me, even though I'm not the biggest jock in the world, just feels like home. Feels like, me.
Well, it's still comfort.
Yeah, it's comforting. It's like smelling a turkey baking in the oven. I mean, that's a huge comfort smell. So when I hear that stuff on the TV, it's comforting to me. Most of the world isn't me. Most of the world is getting their media through their phone, through their computer. They have the Roku devices and Hulu and so on where
Chromecast.
I guess you can view a lot of the shows that you want to watch a day later or 2 or 3 days later and not have to pay cable. You get it for a much, much cheaper rate when you're subscribing to it. I think there's going to be more change there than has even occurred in the past.
Well, and that's one of the big things about who was the big ratings thing like you always, the Nielsen's. Yeah. Mm-hmm. It's all thrown off because everybody has these subscriptions to Hulu and Netflix, and there's nothing that you rush home to watch anymore.
No.
You used to rush home, MASH is on, we got to go watch it because they're not going to show this episode for 6 months. Yeah. But now you can just watch it the next day.
You're right. So to me, that is not under the category of what's going to stay the same. That's under the category of what changes. So that provides some risks and it provides some opportunities. What else? The way we eat is changing all of the time. That's probably going to continue to change. But sometimes I think that it goes back one way or the other. You have this big push on healthy eating, and then pretty soon, you talk to somebody, have you had a quarter pounder lately? No. Well, somebody's lying because it says 1 trillion served, okay, yeah, well, it's fresh meat now. It's not frozen.
They had an article today, I guess 500 people got sick at a McDonald's from the salads. And my first thought was, who's ordering salad at McDonald's?
That's a lie. There isn't 500 people that have 500
salad at McDonald's.
That's nationwide.
Okay. Now I understand it.
Yeah, nationwide. Those salads were spoiling from being there so long. So, McDonald's would definitely be in the category of what's going to stay the same. Wouldn't you agree?
Right.
Yeah.
They've tried to change and had to go back to their old stuff.
Yeah. I read an article that got me thinking too. One of my favorite automotive writers for Road and Track wrote a big editorial on what it was like to be in a Tesla, and he said it was the Tesla Model 3, so it was the stripper one, not the fancy one. And it was a car that they had rented from an owner. So it wasn't all dolled up for the automotive press. And he says what occurred to you is how quiet everything is. Any electric vehicle is quiet. And he said, this Tesla, for lack of a better way to phrase it, does what a car's supposed to do. It has meaningful range, meaningful power, the door's shut, radio. It's a normal car for all intents and purposes, but it's silent. And he says you're in this car that's completely quiet, and you are surrounded completely by these little miniature explosions of the combustion engines around you going off. Oh. And he says, I wonder, it can happen fairly quickly like horses. Horses used to be the mode of transportation. Now horses are basically the hobby of the rich and famous and the people that are really, really quote unquote into it. Some types of old collector cars are that way already, and then the automotive industry, you can get anything custom now. They're making brand new 1955, 56, 57 Chevy bodies, brand new 1969 Camaro bodies.
Well, at work in the break room, they always have that Velocity channel on.
Yeah.
There's like 8 or 9 shows about guys making cars just like that. I want this restored and this.
There's a lot of money sloshing around there, and I'm starting to realize that, especially with me and my age, I'm not the mainstream there anymore either. Automotive stuff is going to continue to change because the newer generations, unless they're vaping with a certain hat and driving a Subaru, they're not into cars. It's different. It's
a Lyft and an Uber is cooler, so they'd rather not own a car.
Maybe, I don't know. It's just changing. And so when it comes to automotive transportation and all that, I would say that pickups and the types of people that buy that are going to stay the same, but a lot of the mainstream of how people, view transportation is changing a bit.
Well, if you live in like a rural area or something, you need hay.
Yeah.
Trucks aren't going to change.
Exactly.
But if you live in Spokane City, you're not going to own a truck.
Maybe not. Seattle is a better thing.
Okay.
Yeah. Here are the technologies that are fast approaching and that are here already or will be here in a matter of months. One is a new wireless standard called 5G. If you look at your cell phone up at the top, it probably has something, a little icon that says 4G on it, maybe 3G if it's a really old phone.
I have one that says OG. I don't know if that.
Nice. That's the cellular wireless standard. The new 5G phones are going to be able to transmit data 100 times faster than your typical Wi-Fi connection. That's pretty much going to mean the death of satellite TV. Should probably mean the death of cable TV. You're going to be able to stream stuff much, much more quickly. Who knows how the Internet of Things affects a person? One client was telling me that they were some city where they used their phone or a card to add money to a parking meter.
Oh, yeah.
And when they were in the meeting, 15 minutes prior to the time expiring, they got a text from the parking meter that said, you only have 15 more minutes left. Mm. That's pretty handy.
Oh, that's frightening.
Well, that maybe not as frightening so much as handy. Those simple things like that we kind of don't even think of right now, the more that those happen, the more that things are going to change. You're going to have artificial intelligence, which let me give you this example. I'm not going to name companies' names because I get the names turned around, so I'm not even going to name a company name, and I think this small company has already been purchased by somebody larger. But it was an article from about a year and a half ago where it was a fertilizer weed sprayer type high-tech company where they said, if you're a farmer and if you have a lawn, how do you spray for dandelions in the lawn? You typically have somebody come and they spray the whole lawn with some sort of liquid. Or you go buy that liquid yourself, attach it to the end of your hose, and you spray the lawn yourself. So you're putting that chemical on 90% or more of the lawn, right? And you're killing the dandelions.
Right.
That's what farmers do. Well, what they had done is they'd used a form of artificial intelligence to where and all that means is they took a computer, they started loading, 1, 2, 3 million images in this computer system of what weeds look like. And then they had this huge sprayer that was towed by a tractor. And the sprayer had a whole bunch of little nozzles on it and even more cameras. Normal visual cameras, infrared, things like that. Of course, here's what they were trying to do a teeny little squirt gun shot of weed killer on that particular weed. Because the amount of chemical that you're putting on decreases by about 95%. So do your costs of that chemical. Pretty nifty. The farmer's costs go down. People that like less chemicals in their food stream, they're happy as well. Mm-hmm. It's extremely effective. So then all of a sudden, where your profit center comes from, if you're in the fertilizing, weed killing industry, all of a sudden you have the possibility that 95% of your sales at some point of your weed killer are going to go away because the farmer only needs 5% of what he used to need. So you're thinking, oh shit, how am I going to make money? So
jack up the price a little bit.
Well, and the company that has that weed sprayer camera artificial intelligence technology, doesn't that become pretty darn valuable? Yeah. So that's a little bit of how the world's changing. So when I'm looking forward at clients' portfolios, I'm trying to do that balancing act. It's kind of like a 4-post stool. On the left and the right, I have the one question of what stays the same. On my right, I have the question is what is going to be different. My forward and back questions are basically me not knowing what the future holds, me having to make decisions about an unknown future. Those are the 4 pillars of how, at a very, very, very high level, how I start to form an investment opinion about either a client or about a company. Now it's time for you to talk.
I was just going to say
something funny.
I'm investing in a computer technology thing called Skynet. They're building these realistic robots. It looks really cool.
Yeah,
so
awesome.
I can't wait.
When it goes live, let me know. Yeah.
They do have a countdown clock, which I found kind of disturbing, but I'm all right with it.
Yeah, when the machines become self-aware, as people say, maybe that's not good.
I'm still disturbed by our talk about the self-driving Google cars and all the destructive things people are going to do when they don't have to drive a car.
Well, I'm just thinking about how to mess with the said Google car, how to make a very lifelike mannequin so you can just drop it in front of a car and drop one behind it and then trap the car because it...
And then steal it?
Well, no, the car can't move because then it's it's programmed not to hurt anybody. What's it do then?
I think it checks for a pulse, and if there's no pulse, it gets to keep driving.
Maybe it sprays tear gas.
I learned about a thing today. There's apparently like rental scooters I think it's called Lime. But you can rent them. It's like 15 cents.
Yeah, attention everybody. Chris hasn't been to a big city in a
I
while.
have
Okay,
not.
go ahead. Okay, you're talking about...
I was in Nashville 2 weeks ago, and it was gigantic. It was a circus to me.
That's a quote-unquote real city.
It is. They were doing things there. But they had one, this guy was telling me about how he rented one, and apparently he thought you could just take it home and just keep paying the price. And about 3 a.m. an alarm went off because somebody was trying to find it again.
Oh.
So that made me wonder, like, about how you couldn't even steal a Google car because it would have like a little, like all of a sudden it just bursts out of your garage and goes driving back home. And
You can steal it. There's always way. you got to. I refer you to the Ocean's 11, 12, and 13 movies.
you can barely hack your little booty pad there.
Oh, watch. You ready?
Okay.
Watch. Boom. Did it just go clear? Yeah, there we go. I got it down.
Did you just erase everything, or did you
Yeah,
just-
I did.
Or did you just change the page?
It was notes to the show, and this show, those notes aren't really
And then
worth
we're
saving. No, I have more notes up here in this thing called my head.
Oh, nobody uses those anymore.
We know.
There's
Yeah.
not even a helmet law in Idaho. No one uses those anymore.
You only wear a helmet if there's something worth saving. So, anyway.
Okay.
So,
And we say goodbye to our Idaho listeners.
well, I didn't say all Idaho people don't wear helmets. I just said the people that don't wear helmets, they
Nothing to
mustn't.
save.
Right, exactly. You know, if you're listening to this podcast, you probably, I would think, are searching the internet sometimes for good media, good listening. You probably already know about this, but if you haven't heard about it, go to Freakonomics.com or Freakonomics Radio. It's something that got started, I believe, maybe with a book, and then it's National Public Radio. But let me tell you, the interviewer is top-notch, and the subjects are completely diverse. And it's all in an archive where you can get maybe 3 or 4 years of podcasts that are extraordinarily high quality, and they have extremely wide-ranging topics. Really, one that I listened to was about an hour-long interview with the CEO of Microsoft. Another one was 45 minutes on the science and the good and bad parts of keeping a lawn. What's good about lawns? What's bad about lawns? Should we be doing it? Should we not be doing it? I mean, you're talking wide-ranging topics and subjects. So if you're, working at your computer, doing your monthly bills, something like that, and if you're looking for a different podcast to listen to, I sure as heck would steer you there, as well as I'm going to have Chris do a little bit of work on this website that you're listening to, because I'm starting to read a lot of books again. I've got a pretty vast library of what I've read, and I'll start to put on some suggested reading. And a lot of the time it will be for investing, but sometimes it won't be. It might be, say, for psychology.
Oh, we could have a book of the month like Oprah.
Yeah, we could. Yeah, maybe we could try to move the market,
Yeah. And if you bought a book and show us a picture of the book, we'll send you a sticker with Mike's face on it saying book club. You can just slap it right on there and wreck it.
I'm thinking a sticker with your face because you're the famous one, the selfie dad bookmark.
They'll just Google image selfie dad and steal it off the internet. Like every other website that didn't pay me money.
You mean all of them?
I mean, all of them. We can't pay you, but we can offer you exposure. Sir, exposure is how I got on the internet in the first place.
So with that, let's take a break and we'll come back and finish up the show. We'll be right back in just a moment or two.
You and I are both businessmen who work hard and pay taxes. Except that I make 10,000 times what you make.
Yeah, we're the same, you and me.
Any opinions expressed herein are given in good faith and are subject to change without notice and are correct only on the stated date of issue. Past performance is not always indicative of future results. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Security, financial instruments, or strategies mentioned may not be suitable for all investors. Prices, values, or income from any investment mentioned in this report may fall against the interest of the investor, and the investor may get back less than the amount invested. This material does not take into account your particular investment objectives, financial situation, or needs, and is not intended as a recommendation of particular securities, financial instruments, or strategies to you. Before acting on any recommendation on this material, you should consider whether it is suitable for your particular circumstances, and if necessary, seek professional advice.
This is Smart Investing with Michael J. Wren.
I don't like the guy. Do I have reasons? Yeah. Good reasons? Yeah. How many reasons do I need? None. I don't like the guy.
Okay, so we're back, and thanks for letting us having that break there. I want to close out the show, try to beat a dead horse. I think it's good to pay attention to what won't change in terms of investments. Here's what, and we talked about it the last show. That's been a while since we've talked about it, but been a while since you've had a new podcast, so we'll try to load this one as quick as we can. but it's the dividends. I think I referred to it on the last podcast, is that dividends are not talked about hardly at all in my industry and in the media. And I think the reason is there's no spin to it. Truly, how can you spin the sunrise and sunset? There's no way to spin it. It's just going to occur at a time and reoccur at another time. And it's kind of a fact, and there's not really a way to put somebody's opinion on it.
It's going to be at 6:35 tonight. And last night it was at 6:34.
Yeah, so there's no way to spin that. And that's how I view the dividends. I mean, there's probably once per year where you could spin the dividend news, where the company, like just recently Altria, which is domestic tobacco in cigarette form and chewing tobacco, they announced a pretty hefty dividend increase, I believe in excess of 10 or 11%. So you could spin that for that one time per year that said, hey, it's great, or it's bad. Maybe they're raising their dividend too much, and we think they're not going to have enough sales or cash to cover it. So there's one way or the other.
Here are 8 experts to talk about it for the next 3 hours.
But it's only going to happen once per year, unless they try to raise the dividend again, maybe twice within a 12-month period of time. So after that event happens, there's nothing to talk about. But just because there's nothing to talk about doesn't mean that things are bad. Things are still good. It's just a fact. And what's nice is all the people that you're shopping with at Walmart or Winco or Safeway or Albertsons, none of their opinions matter. That sunset and sunrise is going to happen no matter what. The dividends, I can't really say that on the podcast or at any time, are going to be paid no matter what, because they're not guaranteed by anybody, but they are pretty damn important to a company. They're really damn important to the board of directors of a company, and so they do change, and they typically are changed upward. Occasionally they're changed downward, but there's no contract that you're guaranteed those dividends. But let me put it to you this way. How many things in life are guaranteed anyway? If you're looking for a guarantee, you're listening to the wrong podcast. You should be, maybe listening to one that's more focused on the clergy. Something like that.
I think if you want a guarantee, you should invest in the company that makes Dramamine every time I announce I'm going to fly somewhere.
Okay.
That's a guarantee.
So, something like that. So I can't tell you at all in any way, shape, or form that they're guaranteed. But let me tell you, they're pretty damn consistent. And it's one of the bedrocks of my strategies of making clients money. And it's a factual thing. Like I said, you can't spin them one direction or another. So just because opinions don't matter, all of a sudden, if there's nothing to have an opinion on, it's not really talked about anymore. If there's a right way to do something, let's say whether it's like painting a car, painting a house, doing electrical work, there's probably only 1 or 2 or 3 or 4 ways to do something correctly in that type of exacting work. There's not a bunch of opinions out there. The people in the know are going to say, there it is, it's done right or it's done wrongly.
Well, from a nerd perspective, people, if you're not passionate about anything, people don't care.
Yeah.
I mean, that's the internet is, this movie changed my life, or this movie sucks. There's no just, you know what, I went to Skyscraper, it was okay. I mean, there's not that anymore. It's, everything has to be extreme or zero.
Everything's drama.
Right.
Yeah, and there's no drama with the dividends. And that's what's awesome. When you are an investor, most of the time, you're looking to remove drama from your life, not add it. And so being able to look at consistent dividends is wonderful because opinions don't matter. You're getting what you get. When you get increases, again, the opinions don't matter. It's a nice increase. Sometimes it's a big fat one. Sometimes it's a little teeny one. But they're nice to have, aren't they? Yeah, it's a good thing. You can't spin it. And what's nice is the consistency of the dividends is one of the first things of your investments that typically won't change when the stock market's going up and down of the price of the company. The price of the company is going to change every second of every business day, but the dividend doesn't. And that's a hell of a nice way to have some consistency. It's why people invest in real estate and rent it out. The price of the real estate's going to fluctuate. It's hard to figure out exactly what a house is worth on any particular day, to the penny, unless you've got a buyer for it. But what is nice is if you've got a renter, you pretty much know to the day how much you're earning in rent. Pretty nice and consistent. And it's got an added factor where you can go drive to it and see it and touch it. Pretty nifty stuff. It's kind of hard to drive to your statement and see it and touch it. Your statement comes in the mail or sometimes electronically right now. There's something to see, but you can't touch it. So having the dividends come into your account a lot of times monthly, for sure quarterly, that's nice. That gives you a bit of, it's concrete, it's tangible. When that money's in the account, it's there.
Maybe when the dividend comes is in a little envelope, maybe have your spouse or whoever's living with you go, do you want it? Do you want to see it? And then treat it like an Oscar thing, have everybody gather around, open it slowly, and the winner is...
Or just pay attention to the dividends. If you get your statements on the internet, pay attention to how that, if you were not reinvesting the dividends, if you're not, if it's just flowing into a bucket like a money market or something, pay attention to how that's growing. It's pretty nifty. It is a place, it can be a place of comfort since, like I said, things are going to change in the future. Some things are going to stay the same. One thing we know is that the market had a pretty negative time about a decade ago. It's been a decade since we've had any sort of what I think a material down market. We're going to have one again. I don't know when, but we're going to have one again. And when that happens, more people freak out than they say. Or prior to the market, I have a whole bunch of people saying I'm okay. And when the market goes down, a hell of a lot less people are there in that same group saying I'm okay. There's a whole other group that say, I don't think I'm very okay. And having those dividends can provide some stability and take out the drama. And maybe you won't need Dramamine as much as Chris does. Maybe that's the moral.
Maybe that's it.
The moral of the show. Anyway, that's a wrap for today's show. Thanks for listening. We'll try to have another one again sometime very soon.
Hey everybody, just a friendly reminder that even though we mentioned a lot of businesses on this podcast, we don't want you to invest in them just because we mentioned them on this podcast, all right? You know what? Maybe we weren't talking about you, all right? It's just like my wife tells me. Not everything is about you, all right? So just play it smart, and we will talk to you next time. Don't forget, if you want to know more about smart investing or see the Facebook or YouTube, just go to smartinvestingshow.com.